Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really pleased to have Michael Oliver with me, as we do every other week. It's always a pleasure to have him with us, and you should all, by this time, know that the place to go to sign up for Michael's letter, Momentum and Structural Analysis, it's an excellent letter that really keeps you up to date on the markets, is olivermsa.com, olivermsa.com. Thanks for being with us again, Michael.
Hi, Jay. Good to be back.
It's really good to be back, and I understand that you've just recently moved into a new abode somewhere in the Rocky Mountains, and I'm very envious of you, I must say, as I hear you talk about the place, looking out the window at the Rockies. Wow, I'm here in New York City looking at other brick walls, So anyway.
Well, sometimes that can be a good vista too, looking at the city. Okay, yeah, nothing wrong with that.
Well, anyway, Michael, we're talking about America's past and its future. And, I guess there have been many times in the past when people in America might have thought, man, things don't look very good. I mean, you did the Great Depression and World War II. We've had other times, the Civil War, of course, and other times in our history when things look pretty bleak. So we want to try to put it in perspective if we can. But nonetheless, that's mostly the topic of today. And I know that what people need to realize is that you're more than just a technical analyst. We have you basically talking about technical things that you see, your models, which have worked extremely well. We have you on the show. We love to have you here, and one of our most popular guests because people really believe what you say, and you have credibility. But people should also know that you do a lot of pretty deep thinking as well. You've written a book called The New Libertarianism, Anarcho-Capitalism, and you talk in there about a lot about what makes for a good life for people. And I just wanted to quote something from Ayn Rand that you have on page 38 of your book, if you would allow me to, Michael, and then I'd like to get your response to it. This is on page 38 of Michael Oliver's book, The New Libertarianism, Anarcho-Capitalism, and he quotes Ayn Rand as saying, "A society that robs an individual of the product of his effort, or enslaves him, or attempts to limit the freedom of his mind, or compels him to act against his own rational judgment, a society that sets up a conflict between its edicts and the requirement of man's nature, is not strictly speaking a society, but a mob held together by institutional gang rule." End of quote. Well, now I'm thinking, Michael, during COVID, for example, some of America's highest-ranking doctors were not allowed to speak and to give their opinion about the policies that were being implemented. They were told to shut up, and they were shut off of the major media. They weren't allowed to talk. One of our most basic rights, the First Amendment right to speak. And government, we're learning now, worked along with some of these big social media and dictated to those social media that they had to cut off people that disagreed with the policies of the administration. I mean, this doesn't sound like America to me, but it sounds exactly like the kind of thing Ayn Rand was warning about here in that little paragraph that I just read. What are your thoughts about, from a social point of view, Michael? And then I will get into the regular things that you and I talk about, the markets and so forth. But what are your thoughts? Because I know, as I say, you're much more than just a technical analyst. I don't mean just a technical analyst, because you're very good at that, obviously. But what are your thoughts?
Okay. Well, in the early days of what we call the libertarian movement now, and most people, if you ask them what the libertarian means, it means generally free markets. They understand that. And so forth. And it started in the early 70s, and I was involved, fortunately, in the early days of its formation. There were probably 50 or 100 of us that were really active, in one way or another. I used to put out a nationwide newspaper called the New Banner, and it was a libertarian objectivist newspaper. Anyway, and yes, I wrote that book around that time, so I'm talking 50 years ago. The trend of the country has always been, especially in, let's say, some 1900s onward, toward more and more statism. regardless of which party was in power. Yes, it's true that, let's say, under Reagan, perhaps, it slowed a bit. But basically, I have an image in my mind, conjure this up, a totem pole, like an Indian totem pole, with two snakes writhed around it, crawling up the totem pole. One is GOP, one is them, okay? And yet, regardless of the alternating control they have over Congress, over the presidency, you know, it alternates every decade or two, you know, that type of thing, the state has grown. In the things it thinks it has the right to control and therefore does impose controls over, way apart from anything the founding fathers would have ever conceived of in terms of what government does, okay? And this has happened regardless of those two parties. It really hasn't stopped. The government has grown, okay, to the point where they early 1900s, they created the Fed, which what does what? It prices money. It's like having a federal government board to price the price of hamburger meat. Okay, as if somebody from above can determine supply demand for a given commodity, in this case, a money unit, which is our medium of exchange between people who don't even know each other. It's got to be a common bond. But the government controls it, and at whim they take it up, they take it down, et cetera, et cetera. But anyway, the state has grown in size, I'm talking the federal government, constantly over the decades, regardless of, even under Trump. I mean, the budget went through the roof. He had military spending like we've not seen in a long time. He wanted the Fed to print money. He wanted the Fed to create rates at 0 or lower to compete with the Europeans. So, I mean, I couldn't, as a libertarian, I cannot quite discern a difference. In fact, there's times when I look at the Democrat Party and maybe one or two issues where I agree with them, and most GOP wouldn't. Let's say abortion, for example. And on the other side, on the Republican side, I see many positions they take that I agree with, but others that totally contradict that. In other words, there's no intellectual integrity on the part of many of those who claim to be limited government advocates. Because they ultimately get behind, the party they get behind is the GOP, and yet it still has been part of the growth of the state. Okay. It creates problems. It creates errors. Whereas if you make an error as a businessman, you make a product that people don't really want, you think they do, and you commit money to it, and you find out, oh, they don't want it. You go bankrupt, okay? So you're in trouble. Not society.
You pay the price.
Yeah, you paid the price. It was your risk. But when government comes in and takes over a given concept, it says, this is something we have to pursue. If they make an error on that, then it's an error that everyone is stuck in, is part of. It's not just an error on the part of a bad thought process by this company or this person. Instead, it's a macro error, and it's coerced on the back of everybody. And I'm not talking just Democrats, it's Republicans too.
No,
it
sure.
superimposed these concepts that everybody must get behind. Why? Because the majority voted for it. Well, Hitler sort of got elected, parliamentary system, okay? So democracy can be, in fact, mob rule. Yes,
exactly.
Maybe 50-some-odd people on a given block want something done and 49 don't, and therefore the 50 control what the other 49 do.
Exactly.
In effect, that's mobocracy. So I think this is breaking down. And I think that fortunately, because of the Fed, they created a market, a paper asset bubble from 2008-9 lows to 2021 highs that exhibited itself in mostly paper assets, muni bonds, high-yield corporate debt, stock market especially, U.S. stock market in particular. When that comes undone, meaning when the errors that were committed based upon false concepts of the value of money, the availability of money, and people who make decisions based on that, long-term investment or family planning decisions, and suddenly that changes because the Fed realizes, we got to do this. So they're playing the game of control one way or control the other instead of letting the market forces determine, you have a crisis like you've never seen, and it's not being discussed today. Most people are looking at the day-to-day metrics, the month-to-month metrics. They don't realize that there was a bubble of a dozen-year size that we've never seen before in the U.S. stock market. The errors underlying that bubble are so huge and so dispersed and miscellaneous, you can't even define them all. They're both individual, corporate, government, and so forth. When they come undone, it's like a dam bursting.
Mm-hmm.
The Fed has pierced the bubble. The bubble is broken. Technically, we defined it in January and February based on NASDAQ 100 S&P and said, that's it. It's over. We're going into a massive bear market. But it's a different bear market than any we've ever seen because what came before it is the biggest bubble we've ever seen.
Mm-hmm.
And this will not be limited to stock prices. It will be, people will feel it in the street. Now, this will have political repercussions. And I don't mean pro-Democrat, pro-Republican. It could fracture the entire system.
Mm-hmm.
In fact, Trump may play a positive role in that. In that, if he doesn't think about these ramifications.
Mm-hmm.
Trump wants to get the Republican nomination. Let's say he doesn't.
Mm-hmm.
Do you think he's going to simply say, "Oh, I think I'll retire and enjoy the rest of my life," or he's going to say, "No, I'm a man of history. I'm going to continue and therefore create a third party."
Yeah. Well,
let's call it America Again Party, whatever.
Uh-huh.
A lot of his hardcore followers are not Orthodox Republicans.
That's
they
right.
only came on board recently because of him. If you slice them out of the Republican Party in the next 2024 election because Trump didn't get the nomination, and they say, I'm not going to vote for the other GOP folks. I'm not in it for the GOP. I'm in it for Trump. They're not going to be there. And if they constitute 15, 20, 25% of what the current GOP is, it will be a disaster for the GOP.
Oh, for sure. Yeah.
Or if he gets the nomination, think of the consequences there.
I don't know. I don't like to think about it.
There's no outcome here politically. There's no outcome politically that will not accommodate the implosion of the bubble as well.
I'm so afraid you're right about all of that. And of course, I think Trump said something. Well, Trump said something yesterday, I think, about where in certain cases the Constitution shouldn't be followed. I don't know if I'm exactly paraphrasing.
That's generalized,
the general idea. And for sure, Michael, I think you'd agree that the Constitution has not been, and we've been going away from it. You were talking about the mobocracy. Well, certainly the things that have been put in place to try to guard against the mobocracy have been, there's one party wants to get rid of the Supreme Court, for example. Well, there's one of the three legs of the stool that's knocked off. But there's been a gradual erosion of those safeguards that are put in place. But I have to ask you, why in the world do you think we know that communism, statism is a disaster? History shows it time and time and time again. Why do people keep opting for it? Why do the masses want to?
Well, I don't. It's hard to say, except that that's what they've been raised upon. And there's intellectuals out there who realize there might be something else. And sometimes it takes a crisis for them to say, hey, this isn't working. And I can easily see that occurring regarding the Fed. And because if anybody goes back and looks at the boom-bust cycles that have occurred under the Fed, starting in the 1920s even, where they pumped the money supply up a lot. And sure enough, you had a bubble then, not nearly the dimensions of ours. And in 29, it broke and wiped everybody out through 1932. And you didn't even come back to the highs again in the Dow Industrials until 1950s. So there's times where economists will say, hey, this hasn't been working.
Yeah.
Broaden it a bit. There may be some people who think on a political, philosophical level that, hey, this mobocracy thing, like we got to have the mob that's in control as opposed to that other mob.
Yeah. Yeah.
Well, I don't desire to control my neighbor's life.
Exactly. So you're a libertarian.
I'm not going to put a bumper sticker on my car that says, "Hey, vote because I want to control your. I vote because I want to control your life."
Yeah,
that'd be a great bumper sticker, but I'm not going to do it.
No, you wouldn't do it, Michael. I know you very well.
No.
All right. Well, let's get on to a couple of the markets. Then I think the equity markets. You said it's over. Basically, how far down? The S&P, which you watch very carefully. And you put out something this morning, I know, talking about the NASDAQ. How far down can these markets go from here? Because a lot of people are sort of the belief that this might be close to the bottom here.
Yeah, well, I've heard a lot of that talk. But fortunately, even some of the major broker-dealers like Morgan Stanley and Goldman Sachs have come out recently and said, hey, this December rally is not going to hold.
Yeah.
So even though if they're 3/4 of the year behind where the MSA said, they're at least on target and they're giving out good advice. It's not going to hold. I suspect we're going to see a change in the debate that you hear about financials about, are we going to have a soft landing? Instead of discussing that, I suspect the next debate's going to be, how hard is the hard landing going to be? They're going to skip right over the issue of the soft landing. And I think that will be triggered in part, coincidentally, not the causal factor, by the S&P and the NASDAQ 100, which is the leader index, taking the next step down. There was all this languishing around we've seen since June. And by the way, the NASDAQ 100 has had a very anemic rally since June. It's pathetic. The Dow had a big one, but the broad market, the leader index, the NASDAQ 100 and the S&P 500, have hardly had a muscle, showing rally. It's very anemic for the NASDAQ in particular. The next leg down, the question is, where might it go? And we've picked some levels, but frankly, we need to revise them. Around 3,000 S&P, for example, and I think we had 8,000 on the NASDAQ 100. But ultimately, we're going deep. Not that it's going to last for decades, but it could last for a few years. In fact, most bear markets in the U.S., if you go back and look at them, they last at least a couple of years. It's between X year and another year, and sure enough, there's 2 years in there. Now, the issue then is the depth of it. And also the real-world consequences. And I suspect the real-world consequences will be very bad. And I'm looking for the sufficient divorce, and I already think it's occurring if you measure it properly, between gold and the stock market, between silver, gold, and et cetera, and the stock market. Yesterday, both of them went down. Today, the stock market went down again big, and gold is up. Not a lot, but it's up. Gold miners are up. It's one of the few stock sectors that's up today. I think that will become clearer as we go through the next weeks and months, as the stock market goes lower, that the divorce will finally become more obvious to most people. And that is, in fact, the place to be, because the central banks will have to come in and print. They have no other policy choice.
Yeah, that would seem to be the handwriting on the wall for sure, and it's a matter of timing. What about then the bond market? Because normally, if you have a systemic change, if the whole system is about to change, I think you have to throw some of the old rules out. We would expect the bond market to get stronger. We'd expect to see money flowing into the bonds. The question has always been, as you've pointed out so often, you were bullish on bonds a lot of times, long-dated treasuries. And you were right about that, because money would come out of the market and would go into the bond market. Well, it hasn't worked this year. The bonds are down. Gold is held up pretty well. It's been a much better safe haven than the treasuries, that's for sure. But what about if we have this real cleansing of this massive decline in the equity markets? Do you expect, like Alasdair Macleod, for example, is a bond bear going forward for the foreseeable future? But what's your take?
Well, we've been bearish on bonds this time around for this year, okay? We hit a target level that we thought would be a bounce point for TLT, which is a long-term government bond ETF, and for the 30-year treasuries. We hit our target. In fact, we went a little bit beyond our downside target. By target, I don't mean the end target, but just an intermediate target. And sure enough, they generated a rally. And as you said, they're steady today, so people are plowing into that as opposed to the stock market. They're trying to treat it as an alternative, which often it's been historically. Ultimately, I don't think that alternative is going to persist. I think the bonds will go lower, rates will go higher. This is a technical assessment, not also fundamental, but there's a major technical assessment that the damage done in the recent bond drop is so serious that treat this rally in bonds or dip in yields as temporary.
Well, I certainly think that people will really be taken back when they look at their 401ks and their IRAs this year, and they, oh my goodness, those 60-40 bond, equity bond splits, it didn't work, and those people who held gold will be relatively well off as opposed to treasuries this year. It just seems to be maybe a major change taking place. I guess we'll have to leave it go at that, Michael. We're out of time. Thank you so much for your ideas, your thoughts. Always appreciated, especially today when you expanded a little bit more. Wonderful to hear your thoughts. Thanks so much.
Thank you, Jay.